Let's talk about the currency, or the impact all this is having on the currency markets. Marshall Gittler is head of global FX strategy, IronFX. Morning to you, Marshall. We'll start with the ECB. I mean, we've seen the lows the euro has reached. What are your expectations from Draghi tomorrow, and how's that going to affect the currency?
Well, I don't expect them to actually announce any new measures or anything. I just think that in the statement he'll repeat some comments that he said individually back in November about willing to do more and even willing to do quantitative easing with sovereign bonds if things get worse. I think by saying that in the statement, he'll try to give that the imprint of the imprimatur of the whole ECB governing council rather than just his personal opinion. But I don't expect any new measures. They've still got to see the results of the measures that they've announced already before they take any new measures. If they took new measures before they saw these results, it would be admitting that what they've decided to do is a failure. So several ECB members have said they want to wait till the first quarter, they'll see what happened, and then, if necessary, they'll go and do more. So I just expect a reaffirmation of what Draghi's already said, trying to make it seem like the view of the whole ECB rather than his personal view.
And where's the euro heading?
Down. I think, although actually, if they do come, I'm sorry I said that so quickly. If they don't come out with new measures, there's likely to be a little disappointment. I think euro-dollar could shoot up temporarily. That's generally been the pattern that we've seen. But I think over time we'll see that the Fed's view is much more hawkish. We'll see that, in fact, people will start to reconsider and say, okay, maybe they're not going to do anything now, but in the first quarter they will do something more. And I think the euro would tend to fall after that. But we could see a bounce up on no action.
I want to talk to you about sterling as well, given that we've got this autumn statement today. Do you think we're going to be able to maintain our current level of growth in the UK, and how's sterling going to react to this?
Well, yes, if you look at the PMIs, they were very good for Britain, although the exports weren't very good. Domestic demand is still holding up quite well, and I would expect that to sustain growth here. Yes, the autumn statement is probably going to say that the deficit is bigger than expected. They'll have to continue with austerity long. Can't come out with any big new spending plans because where are they going to get the money from? They just give it here and take it from there. But I think sterling has reached an equilibrium level, and going forward, I would expect it to appreciate gradually, given that the strong domestic demand is such a big contrast to Europe and many other countries that are really struggling right now.
I want to get a quick comment from you on the loonie as well. I know the Canadian Central Bank is meeting on rates. Where's this currency headed in light of what the dollar's doing?
Yes, the Bank of Canada is meeting today. If you look at the economic indicators for Canada, really they should be taking a slightly less dovish, more hawkish tone. Inflation is above target and the domestic economy is doing well, but oil prices are a big worry for them. They're coming down. I would expect that they would take a neutral tone. They might take a neutral tone, which would be disappointing to the markets. And they could keep rates low for longer than they would have otherwise, just because of the weak oil prices. In the longer term, I think that's going to work to the detriment of the Canadian dollar. I see the Canadian dollar falling. But today, it depends on whether they emphasize the domestic economy or the international picture, which would include oil. They could say, okay, inflation's above target, and take a more hawkish view, and that would strengthen the loonie temporarily.
Okay, Marshall, thanks very much indeed.